So let me get this straight. You're looking to buy your first home, but you don't know where to start. All this talk about interest rates or the market going up or down is overwhelming you. Trust me, you are not alone. Hello everyone, my name is Manuela and I am a real estate agent for the one and only, the beautiful Sunshine State with eXp Realty. And today I will be helping you with some basic tips and information when buying your first home. First of all, let's debunk the biggest mortgage myth out there. I need a 20% for a down payment. This is a very common assumption out in first-time home buyers and potential home buyers in general that actually discourages a lot of them from even looking for a home. And that is not true at all. There are different types of loans out there. And though there are some that would require you to put a 20% down, or in cases of foreigners, even a 30% down, there are some that will allow you to buy your first home with a much lesser down payment. First, you have FHA loans. FHA loans are a type of mortgage that would allow you to buy your property with as little as 3.5% down. They are insured by the Federal Housing Administration, which lowers the amount of risk to the lender and therefore allows the lender to offer you a lower down payment. However, they do require you to go through an additional qualification process to get homeowners insurance and to go through an inspection for the specific property that you're looking to purchase. There are also other conventional loans out there that would allow you to put as little as 3% down. However, keep in mind that it is all about balance, so it might affect the amount of interest that you're charged on the loan or how high your monthly payments are. Furthermore, there are loans out there that allow you to qualify with as little as 0% money down. Some of this would be a VA loan or a USDA loan. VA loans are specific for veterans of the United States, and USDA loans are specific for rural areas in development. A tip to keep in mind when it comes to USDA loans is that it is whatever rural area is qualified by the government. So even if you yourself think that that area might not be qualified as a rural area, it might actually be. Of course, specific details vary on a case-to-case basis, but it is important that you know that there are options out there. You just have to look for them. Section number 2. What do lenders really look at when qualifying you for a loan? Every lender or bank will want to know that you're actually qualified to pay them their money back, and therefore they will look at 4 main things when trying to qualify you. First will be your credit score. There are 3 credit bureaus in the United States: Equifax, TransUnion, and Experian. These companies collect data on your spending and borrowing habits to determine your capability of being able to pay back any debt overall. Yes, this includes your credit card debt, your car loan payments, or your student loans. Basically, the higher credit score that you have, the better. When looking for a mortgage, a score of 740 or more would probably get you the best deal. However, you can also aim for a 620 or higher, or just try to keep your credit score as high as you could possibly have it. For this, try to keep your credit card debt at 30% and not higher, and never miss any credit card payments. Second, your debt to income ratio. This is basically a comparison or the overall amount of debt that you have compared to the income that you make in a specific period of time. Ideally, you want to keep your debts under 43% of your income to get the best deals. Third, your income and job stability. Lenders want to know that you're actually capable of paying their money back in the future. Therefore, a lot of them ask for at least 2 years of taxes and your employment history. In this case, you don't want to have large employment gaps in your history. And fourth, your down payment and your savings. Now, even if you're not required to put a 20% down payment or so, it's still good to have some money in the back to prove to the lender that you have some cash to cover emergencies or unexpected costs. A pro tip here is that you should always try to get pre-approved with a lender before you actually go house hunting. Section number 3. Interest rates. Interest rates this, interest rates that. It is always a huge topic of conversation in the housing market. This is because interest rates are the percentage of interest or additional money that would be charged to you per your principal. Try to always aim for a fixed rate mortgage, which means that it is a rate that will not change over time. This allows you more certainty as a borrower just in case interest rates do go up in the future. It is highly important because a small difference of as little as 0.25% can represent to you thousands and thousands of dollars. As a borrower, you're interested in getting the lowest interest rate possible. In order to be eligible for this, just remember to keep track of the 4 categories that we mentioned before. Simple, the better your standing, the better your chances of being eligible for a lower interest rate. Nonetheless, remember that the interest rates are also determined by the market. They are set by the Federal Reserve as a way to either increase or decrease consumer spending, and therefore they're set to either go up or down. And section number 4, your transaction costs. Real estate is a fixed asset that has relatively high transaction costs. So before you buy your first home, make sure you plan ahead for at least a 4% additional cost of the total home price. Just make sure you are prepared by the time of closing. So there you have it. That is some basic information that you absolutely need to know before you try to buy your first home in general. Buying your first property does not have to be scary. You just have to understand your options and plan ahead. If you are looking for more content like this, just don't forget to hit the thumbs up and the subscribe button down below. I will be more than happy to answer your questions in a future video, or you can DM me as well. Thank you for watching today's episode of Rise. Remember, my name is Manuela, and I will be seeing you next time.